Welcome. In this video, can Hbar increase by 910% and make a new ATH? We will analyze this. Don't forget to subscribe and like, and please watch to the end to understand. An ascending trend structure is one of the most trusted formations in technical analysis and one in which investors hold positive expectations for the future. An ascending trend line shows that even if the price pulls back at certain intervals, it consistently forms higher lows, maintaining upward momentum. This indicates that overall market sentiment is positive, buyers remain strongly active, and even if selling pressure occurs, the price can gather strength from support and prepare for new upward moves. If such an ascending trend line exists and the price experiences a pullback toward it, a significant portion of market participants may consider buying at that point. The trend line is not just a technical line, it also represents collective investor psychology, points of confidence, and previously tested levels. Therefore, if the price returns to this trend line, the likelihood of the market reacting here again is quite high. For example, if an ascending trend line has been tested multiple times in the past and the price has bounced upward each time, this actually proves how strong and reliable the trend line is. Many investors have profited at these levels before, so when the price returns, they tend to apply the same strategy again. This creates a self-reinforcing mechanism. In other words, the price touching the trend line has the potential to react upward again because both technical analysis signals it and investor psychology expects it. The strongest aspect of an ascending trend is that it shows the price is not in a one-time upward movement, but has instead gained sustainable momentum. If the market only had a temporary rally, the price would rise for a while and then fall back at the same speed. However, ascending trends prove that with each pullback, buyers reassert control, continuously lifting the lows upward. Therefore, each time the price approaches the ascending trend line, confidence in the market is reinforced. This sense of security leads investors to hold on to their assets rather than sell and even make new purchases. As a result, the price moves upward again. At this point, the scenario of the price bouncing from the ascending trend line creates a very positive expectation. This shows that the trend remains strong. A bounce from the trend line also indicates that bulls still control the market and that selling pressure is temporary. Each contact with the ascending trend line is effectively a test. If the trend holds, the price successfully passes the test and begins moving toward higher levels. For example, consider an ascending trend line drawn on a 4-hour or daily chart. If the price bounces upward each time it touches this line and creates new highs, market participants shape their strategies based on this structure. Many investors place buy orders near this trend line because it is not only a technical support, but also a zone of confidence. If the price returns to this area and bounces again, it reinforces the strength of the trend. In the eyes of investors, such a move is not just a short-term profit opportunity, but also a strong indication that a long-term upward trend continues. A potential bounce from the ascending trend line can create chain positive effects in the market. Short-term traders see this reaction as a quick buying opportunity, while medium and long-term investors, seeing that the trend remains valid, strengthen their positions. This increases both trading volume and the upward momentum of the price, creating a stronger foundation. In technical analysis, one of the most important aspects is not just that the price reverses from a certain level, but that this reversal occurs with strong volume support. If the price bounces from the ascending trend line and rises with high volume buying, it creates a much stronger sense of market confidence. Another important point is that the ascending trend line acts as a compass for investors. A bounce from this line shows that the market still has strong upward conviction. If the price bounces from the trend line and moves upward, this is not only a technical reaction, but also confirmation of long-term upward potential. Such a bounce gives confidence not only to short-term investors, but also to large institutional players and long-term funds. As long as the trend line remains intact, the upward scenario remains valid. Market psychology should not be overlooked. Many investors do not see trend lines merely as lines on a chart, they perceive them as a safety net. The price reaching the trend line creates in investors' minds the expectation that it could bounce here again. When this expectation is realized, confidence strengthens and the market moves upward more strongly. This causes the ascending trend to become self-reinforcing. Each bounce brings new buyers, the new buyers push the price higher, and the rally attracts even more participants, generating greater demand. If the price returns to the ascending trend line and reacts upward, it not only shows that it has found support at the current levels, but also that it maintains the potential to reach much higher levels in the future. As long as the trend line remains unbroken, the market's direction is upward. One of the points investors pay the most attention to in technical analysis is whether the trend is preserved. If the trend line remains valid, investors continue to plan long-term strategies accordingly. In conclusion, when there is such an ascending trend line and the price has the potential to return to it, a bounce from this line paints a very positive picture for the market's future. It demonstrates that the market is still bullish, buyers remain strongly active, and the upward potential continues. Therefore, the price approaching the ascending trend line is generally considered a strong opportunity rather than a risk. If the price successfully bounces from here, it not only represents a temporary gain for investors, but also confirms the strength of the trend. This confirmation is one of the strongest signals that lays the groundwork for much larger future rallies. However, we can't base analysis solely on trend lines. Let's also examine other metrics. Stay tuned.
When a descending trend line forms on the RSI indicator, this structure typically indicates that the market has been under pressure for some time. Buyers have been weak and sellers are more dominant. Since the RSI is an oscillator that measures the speed and momentum of price, staying in a descending trend shows that the price has consistently been giving lower reactions and buying pressure is limited. However, such descending trends do not last forever. On the contrary, the market usually gathers strength at some point, and breaking this trend often triggers a sudden and strong price movement. This is where a breakout in the RSI indicator comes into play. Such a breakout signals that buyers have regained strength against sellers, and the price is preparing for a new upward attack. The importance of this RSI breakout is not independent of the price movements we see on the chart. In fact, these breakouts are often precursors to significant price movements. The RSI could detect momentum changes before price action, meaning that a breakout above a descending trend line on the RSI can signal that buyers are becoming more eager and a new momentum is forming in the market, even before a noticeable rise appears on the price chart. This makes it a critical signal for investors. Breaking a descending RSI trend line is also a psychological threshold. Many traders follow trend lines on the RSI, and when this breakout occurs, market participants often act almost simultaneously. The result of this collective movement usually manifests as a sharp and rapid price increase. While the RSI breakout may appear to be merely a technical structure, it actually represents a mass psychological shift. For many traders, this breakout is perceived as a new upward surge is starting, creating a chain positive effect on the price. Sometimes RSI breakouts develop in sync with price, and other times they signal movements not yet visible on the price chart. For example, if the price is still moving sideways but the descending trend on the RSI breaks, it is generally a strong sign that the price will launch an upward attack in a very short period. Since the RSI measures the internal dynamics of price, it can provide leading information about future price movements. This offers investors a significant timing advantage. Moreover, breaking a descending trend on the RSI is often supported by increases in buying volume. In such breakouts, not only does the RSI signal a change, but investor appetite also rises. Breakouts supported by volume can lead to stronger and longer-lasting rallies. In other words, a descending trend breakout on the RSI alone is already a strong signal, and when combined with volume, it becomes a confirmation mechanism that makes the upward attack more reliable. Another point to note is that RSI breakouts often initiate a trend reversal. If a long-term descending RSI trend breaks, it can signal not only a short-term rise, but also a larger trend reversal. Therefore, after an RSI breakout, it is quite possible for the price to enter a new upward trend lasting not just a few days, but several weeks. This indicates that investors should exercise patience, managing the fluctuations after the breakout and focusing on the bigger picture rather than expecting immediate price surges. Breaking a descending RSI trend is especially common at the beginning of bull markets. During periods when the price starts recovering from low levels and many investors remain skeptical, the RSI breakout serves as one of the first signals of a new bull movement. These breakouts often occur just before major upward trends and signal upcoming strong price attacks.
An ascending channel structure is one of the strongest formations in technical analysis, indicating that price regularly moves between the upper and lower bands and that these movements reflect the existence of a clear trend. This structure shows that the general direction of the price is upward and that market participants are more dominant on the buying side. In particular, the ascending channel formation symbolizes both the continuity of the trend and investors' confidence. When the price moves toward the upper band of this channel, this movement is usually supported by a stronger upward momentum. The approach to the upper band signals that buyers are still actively present in the market, pushing the price higher despite supply pressure. If the price progresses toward the upper band within this ascending channel and reaches it, it is highly likely that the expected upward movement will reach much higher levels. The projected 9–10% increase here represents an extraordinarily strong upward potential. Mentioning such a high percentage may sound almost impossible to many investors. However, in technical analysis, especially in cryptocurrency markets, such increases have historically occurred repeatedly. Understanding the psychology of an ascending channel is very important at this point. The lower band typically acts as a support zone. Each time the price reaches this zone, the involvement of buyers proves market confidence and belief in the continuation of the upward trend. Every bounce from the lower band sends investors the message that the trend is still ongoing. The upper band acts as resistance. As the price approaches it, there is usually some profit-taking or selling pressure. However, if the price reaches the upper band strongly without breaking it, this indicates absolute dominance by buyers. Now, let's examine the 9–10% increase potential in more detail. Moving toward the upper band of the ascending channel not only aligns with technically drawn lines, but also triggers investors' psychology. Investors are aware of the channel structure and understand that reaching this upper band could result in a potential major breakout. This expectation further increases buying pressure and accelerates price momentum. Another notable factor in such massive increases is market volume. As the price nears the upper band, volumes are observed to rise. This happens because not only small investors, but also institutional investors notice the significant upward opportunity and enter the market. The potential for a 9–10% price increase roughly equates to nearly a tenfold rise. This means that even small investments could transform into massive gains. For example, a $1,000 investment potentially growing to $10,000 provides investors with incredible motivation. Therefore, movements toward the upper band of the channel are usually met with excitement and trigger stronger buying activity in the market. By its nature, an ascending channel advancing toward the upper band indicates that the trend is strengthening. Regularly creating higher lows and higher highs is the clearest sign of bull dominance in the market. In such an environment, investor confidence solidifies. Price movement toward the upper band is interpreted as a strong trend confirmation. This confirmation can even encourage large funds to enter the market, as major players usually do not take risks without confirming the trend direction. Movement toward the upper band and a potential breakout sends these players the message that the market is definitely moving upward. Reaching the upper band also marks a significant psychological threshold in technical analysis. A large portion of investors perceives this level as a success point. Therefore, reaching the upper band indicates not only that the trend continues, but that a larger rally is imminent. Such movements often attract media attention. Coverage in news feeds brings more investors into the market. Thus, a 9–10% increase becomes not just a possibility, but a plausible scenario. The power of the ascending channel formation lies in how it manages investor expectations. The lower band always functions as a safe haven. Investors know they can buy when the price reaches it. Therefore, movement toward the upper band attracts attention not only from existing investors, but also from new entrants. Everyone recognizes the orderly functioning of this channel. In such an environment, movement to the upper band leads many more investors to open buying positions.
The 9–10% increase potential is also highly attractive for long-term investors. Such massive upward movements not only create short-term trading opportunities, but also significantly increase the value of long-term holdings. When large investors recognize this potential, they usually increase their purchases, causing buying pressure to grow in a chain reaction. Consequently, the price doesn't just reach the upper band with this momentum, but may also break through it, initiating a massive rally. An ascending channel structure is one of the most sought-after and trusted formations in financial markets. Regular price movement between the upper and lower bands provides investors with substantial predictability. When the price moves toward the upper band, this predictability becomes even clearer. Investors begin to expect that the next step will be an even bigger rise. This expectation creates a self-reinforcing market effect. As investors buy, the price rises. As the price rises, more investors buy. In such a cycle, a 9–10% price increase is not surprising. In conclusion, the movement of price toward the upper band in an ascending channel and the possibility of a 9–10% increase upon reaching it is an extremely positive scenario. This potential is supported not only technically, but also psychologically and fundamentally. The disciplined structure of the ascending channel increases investor confidence, and the price's movement toward the upper band transforms this confidence into tremendous momentum. If the price indeed reaches this upper band, the doors to an extraordinary rise open. Thus, a massive 9–10% increase becomes a feasible scenario, capable of delivering significant profits to investors.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.